Hello everyone. One of the important and very challenging topic for commerce and management students is particularly the preparation of financial statements. To help you out, I'm here with a very interesting question to prepare the profit and loss account and balance sheet. This is the hypothetical company Surya Trading. So basically this particular question, if you see all the accounts over here are not that much difficult to show in profit and loss or balance sheet. But what are the certain things that are there, particularly in adjustment, that you need to understand how to treat this? So to help you out, this question I have designed. Let me read out the questions first. What are the different accounts that are there in Trivalence? Share capital, easy. General reserve, sales, purchases, opening stock, cash and bank balances, debtors, machinery, salaries and wages, rent and rates, depreciation and bad debts. So far it is not that much difficult to prepare this statement of profit and loss. Now see the adjustment. You have closings, inventory, you have additional bad debt. This is new bad debt. So here the complexities are coming slowly. One is that you have already bad debt which is there in the trial balance, as well as you have additional bad debt. So how to treat this, we'll see. Then you have provision for taxation, very easy to treat. Then the another interesting point here is that the board declared a 5% dividend on equity shares and transfer 10% of profit to general reserve. So these are two interesting points that we'll see in this particular question. So before proceeding further, I would like to request you all to kindly note this question first, so that when we'll proceed with the answers, then it will be easy for you to refer. Okay, so please pause for some times and write down the question first. I have already solved this particular question, or putting in differently, I have already prepared the statement of profit and loss and balance sheet. Now I will tell you that how I have prepared. But as I told you, please keep the question ready in front of you so that you can refer to in case if needed. Okay. This is the structure of the profit and loss as per Schedule 3 of the Companies Act. Here I have not changed. Okay, I have not proceed with some more information that I think are not relevant or not required at all. Okay, so starting with the revenue from operation. So we have only one information about revenue from operation, that is sales. So for sales, 4,50,000, 4,50,000. There is no other information about other income, so my other income is nil. So the total income that is coming is 4,50,000. Okay, so the total income is 4,15. So there is no other notes up to this. Now coming to your expenses side, there are certain expenses. So the first one is cost of material consumed, nil. The second one, purchase of stock in trade. Note number 2, purchase of stock in trade. So purchase of stock in trade is 2,70,000. If you see the question, you will find that this particular figure. Okay. Next is changes in inventories of finished goods, work in progress, and stock in trade. So what we'll see, we'll try to find out the difference between the opening and closing stock. So my opening stock is 90,000, my closing stock is 10,000. So minus 10,000 is the difference that I have shown here. Employee benefit expenses. So if you see employee benefit expense, only one information, that is salaries and wages are there, and in the in adjustment you have advanced salary. So advanced salaries normally should be deducted, because here we are preparing for the year ended 31st March 2025, and the expenses that you have incurred in a particular year will be considered. So any expenses paid in advance will not cover here. Okay. Then there is no finance cost. Whether the company has given any interest to debenture holders or anything like this, no. So finance cost is nil. depreciation amortization 10,000. Now how depreciation amortization has come? Depreciation and amortization, so here in this case we are not supposed to calculate the amount of depreciation. Instead, depreciation amount is given in the trial balance. So from the trial balance I have taken the information of 10%, sorry, 10,000 depreciation. Okay, now other expenses, you have 6 other expenses. So other expenses, basically there are two information. Number one is your relating to your rent and rates. Rent and rates is 35,000, and the second one is that how to treat bad debt. Okay, so in this case, even if there are bad debts, provision for bad debts, old bad debt, new provision, old provisions are given to you, just follow this particular formula. Old bad debt, which will be there in the trial balance. New bad debt will be given in the adjustments. New provision you need to calculate. Old provision given in the trial balance. So in this case, if you see carefully, my new bad debt and old bad debt are given to us. There is no information about new provision. There is no information about old provision. Okay, so the total that is coming is after addition subtraction is 9,000. Okay, so altogether is 44,000. So is 44,000. Now for your understanding purpose, let me tell you one important thing is that here see, you need to calculate new provision. Okay, how to calculate new provision? New provision will always be calculated on debtors after subtracting the amount of new bad debt. Okay, so for example, here what happened, it is not asked to calculate new provision, otherwise I could have shown you. But let me tell you one, let me give you one example. Say for example, your debtor is 1,10,000 and your new bad debt rupees 10,000. So what you need to do, you need to, in order to calculate new provision, the amount of debtors will be 1,10,000 minus 10,000, because this 10,000 already bad debt. What provisions you will create? Okay, so it is not necessary. So the amount of remaining is 1 lakh. On 1 lakh you need to calculate the new provision, and old provision will always be given the trial balance. So that is coming, that is the way you need to calculate if old bad debt, new provision, old provision are given to you. So altogether the total expenses that is coming is 3,54,000. So you know very well that how to calculate the profit. That is, here in this case I have used the exact sentence as given in the Schedule 3 of the Companies Act. It is profit before exceptional and extraordinary items and taxes. So it is coming, how you need to calculate, you need to calculate is like this: 3 minus 4. What is 3? 3 is my total income. Okay, what is 4? 4 is my total expenses. So 4,50,000 minus 3,54,000 is coming 96. There is no exceptional items, so 96,000 is my profit before extraordinary items. There is no extraordinary items, so 96,000 is profit before tax. So in this case, the information, if you see the adjustment 4, you'll find that provision for taxation to be made is 20%. So what happened, I have calculated tax expenses, which is there in note number 7. Note number 7 is the tax expenses. Current year tax is 96,000 into 20%, which is 19,200. So I have written 19,200. Now if you see profit for the year is nothing but profit before tax minus what is the tax. Profit before tax is 96,000. What is the tax? 19,200. So 17,800 that is coming is my profit for the year. So this is the way you need to prepare the statement of profit and loss. Clear? I hope it is clear. Now, so as I told you that you need to prepare either means only the statement of profit and loss and your balance sheet. But here what happened, there are certain informations that are there, like the board declared a 5% dividend, which is unique adjustment, and transfer 10% of profit to general reserve. Now if this kind of informations if this kind of informations is there in the question, then you need to show the appropriation of profit. Okay, now how to prepare the appropriation of profit? Appropriation profit is very easy. Profit for the year, that I have carry forwarded from the statement of profit and loss, which is 76,800. Clear? Fine. Now two informations are given. Number one is that transfer to general reserve and declaration of dividend. The question is whether transfer to general reserve should come first or declaration of dividend should come first. So of course, now you need to understand very carefully. After transfer the profit to general reserve, whatever amount is left, that amount should be declared as dividend. Okay, now here first I have transferred 10% of this amount to general reserve, which is coming 7,680, and then I have calculated the amount of dividend. Now dividend here is mentioned that 5% on equity share. My equity share, if you see the trivalence, my equity share is 3 lakh. So I have calculated 5% on 3 lakh, it is 15,000. So altogether it is coming 22,680. If I subtract from 76,800, it is coming 54,120. So 54,120, the profit that should be transferred to the balance sheet. Clear? So if it is asked to you or not, okay, so you need to show the appropriation of profit, because all this, there are certain relevance for this, we'll see later on. But for the time being, just keep in mind that whether informations or whether you are asked to prepare the appropriation of profit or loss, appropriation of profit, you need to prepare by default. If the information like transfer to general reserve, then declaration of dividend, or any such information where the profit should be distributed or profit should be apportioned, you need to prepare the appropriation of profit. Okay, so now we'll start with the balance sheet. Okay, so I have prepared the balance sheet for you. Now I will explain how I have prepared it. Okay, now here the adjustment, all the notes of balance sheet are there. So the format is as per the schedule 3 of the Companies Act. I have not changed it at all. Now I'll explain one by one. So first one is equity and liabilities. Up to this part is the equity and liabilities. The first one is shareholders fund. Shareholders fund consists of share capital, reserve and surplus, money received against share warrant. Okay, now if you see the share capital, note number 8, share capital is the capital that is there in the trivalence, which is 3 lakh, and dividend that I am going to declare in this year, that is the amount of 15,000 that I have shown here. So I am showing here. Okay, so it is coming 3 lakh 15,000. So 3 lakh 15,000 is the amount of share capital. Now reserve and surplus. Reserve and surplus, this is general reserve which is there in the trivalence, means the balance of general reserve. Current year I have transferred to general reserve 7680. Okay, so you can do one thing, along with this general reserve you can add this this transfer amount. Okay, so and you can put in the inner column and show the 57,680 at the outer column. Now the profit and loss, the current year profit. Okay, current year profit we have 54,120. So 54,120, what I am doing here, I am not taking into account 76,800 which is there in your statement of profit and loss. Rather I am taking 54,120. Okay, 54,120 that we need to show under the statement under the profit and loss account is 54,120. Altogether it is 1,18,800. So 1,11,800. So 1,11,800. There's no information money received against share warrant, share application, money pending allotment, no. Long-term borrowings, no. Long-term borrowings, deferred tax liabilities, other long-term liabilities, long-term provision, no such information. There is no current liabilities. Okay, only you have the provision of short-term provision. Short-term provision is provision for taxation. Okay, so provision for taxation amount is 20% on the profit before tax amount, which is 19,200. So 19,200 is the amount of short-term provision. And okay, now if I combine all these 1 2 3 4, means I will get the amount of 4,46,000. Okay, so 4,46,000 is the amount of equity and liabilities. Now come to the asset sides. Fixed assets, under fixed assets you have tangible assets, only machinery is there. Okay, so machinery, I have mentioned whatever amount is given in the means uh, trial balance, I'm showing that value only. Now from this I am not deducting depreciation. Remember, if depreciation is mentioned in the trial balance, you are not required to adjust, because it is already adjusted. Depreciation, you will adjust depreciation only when it is mentioned in the adjustment. Okay, so here tangible asset is 1,20,000, no intangible assets, there is no investment, there is no long-term loans and advances, there is no other non-current assets, there is no current investment. Inventories, this is my old inventories. Okay, or not old, sorry, it is my closing inventory. So closing inventory is 1 lakh, so closing inventory 1 lakh is there. Okay, I've just flipped the page for I've written the notes number 30 in other pages, so that is okay. So now coming to the trade receivables. Trade receivable, if you see trade receivables, you have debtors. Now how to show the amount of trade receivable? You have debtors amount 1,85,000. The new bad debt, from here you need to first deduct the new bad debt. So my new bad debt is 4,000. I have calculated, not calculated, is there in the adjustment. So 1,81,000 is the amount of trade receivable. So 1,81,000 is the amount of trade receivable. Cash and cash equivalents, very easy, which is there in the in travelance. Okay, and see here the hidden information is that current assets, other current assets, salaries paid in advance. So any expenses paid in advance is your asset. Okay, current asset. So I have shown current assets here. So the sum of this is 4,46,000. So in this case, both my equity and liabilities and assets are matching. Hence the I have correctly prepared these statements. So this is the way you need to prepare the statement of profit and loss and balance sheet. So if you find this kind of adjustment, particularly the transfer to general reserve and a payment of dividend and taxation related informations are given to you, you can now refer this video for the preparation of statement, different statements. Okay, so if you like the video, please like and subscribe the channel. Thank you.